real world assets panel. We got 5 great people up here. I'm going to talk a bit about how real world assets integrate into Solana. So I wonder if we could start here and tell us a little about who you are and what your connection with Solana and real world assets is. Go ahead.
Hi, I'm Paula Pettit. I'm the VP of Strategy and Growth at Range. Range, we're one of the leading treasury and risk management platforms on Solana. And so, yeah, I've been in the space for the past 8 years and really excited to see how it's evolved and, moving into the real world like this.
Good morning, everyone. I'm Katie Wheeler. I am MD, Head of Global Partnerships at Ondo Finance. I've been leading the go-to-market efforts at Ondo for the last 2.5 years. I also spent some time at Circle, and before that, I spent over a decade in traditional finance. Ondo Finance focuses in tokenizing RWAs. We focus in treasuries, equities, ETFs. We have about $2.7 billion of TVL at the moment and 205 assets live. We've been working in Solana since December 2023, and I've been leading that relationships ever since.
Hi, Thorsten Jaeckel. I'm the head of product at 0x and Matcha. 0x is a leading DEX aggregator. We've been on EVM for the past almost 9 years or so. We're currently building our Solana API. It's in private beta, launching later this quarter. We're focused on aggregating liquidity for all sorts of tokens, and we think there's a lot of opportunity in tokenizing real world assets, equities, commodities, etc. And so we want to make sure we can support that as best as we can.
Hi, everyone. My name is Ev. I run Legion, which is a merit-based fundraising platform. We do fundraising for startups which build on top of Solana. I guess my relationship with Solana, I probably just lost too much money there. That's the main soundbite.
Hi, everybody. My name is Matt. I'm one of the co-founders and the CTO of a company called Pinata. Basically, where we sit is we do a lot of the off-chain data management for basically anything that needs to work with on-chain but is too big to fit on-chain. So real-world assets, anything that's kind of a tokenized asset, we provide the data layer for that. So excited about RWAs, getting all these really important files, following around the data or the assets as they move across chains, and yeah, happy to be here.
Awesome. So real-world assets. Katie, what do you think is the most realistic real-world asset that is going to hit Solana next? Treasuries, credit, funds, equities, real estates, invoices, commodities. Which one do you think is the next big one?
Yeah, for sure. Well, I think to begin with, first of all, the first thing that found product market fit for RWAs was stablecoins. So beginning of last year, we had 250 billion of stablecoins. At the end of the year, we had 300 billion. So we saw 88% year over year growth, but still less than 2% of M1 money supply. So we have a long way to go. Once you have a stablecoin that really lays the rails for more assets to come, I am of the belief that you want to tokenize the most liquid assets to begin with. So that's really where Ondo started. We have 2 tokenized treasury products. About $270 million of that is on Solana today. We have one that's geared towards institutions and then one that is more geared towards a retail audience. And so for me, I think the evolution will be stablecoins, then treasuries, then equities, ETFs, commodities, and then longer term, it'll be more illiquid stuff like private credit, real estate. I think you can really tokenize anything, but I don't think tokenizing things for the sake of tokenizing things really does anything. And so if there's no utility for it to be tokenized, then nothing will grow. And so stablecoins obviously are a great thing. They're very composable. They're programmatic. They trade 24/7. And so once people get comfortable with using cash on a public blockchain, that really just sets the rails for other assets to come on chain because you now have a custody set up. And I think that'll just open the floodgates. So the most liquid public markets to start.
Okay. Ev, stablecoins, do you think those are the next one? Or do you think one of the other ones is more likely to be next?
Yeah, I mean, stablecoins already is like the go-to RWA, but I'm going to shield my own backs. I think equities of private companies is the next big thing. Because right now, I think there is a structural problem with crypto startups, which is equity plus token model, where you have tons of VCs, early stage investors, so they have equity rights, and then late stage investors, they are holding token, which normally goes to zero most of the time. So yeah, how you can just create one thing, which is token is the equity, which gives you ownership rights, cash flow rights, governance, etc. And this can solve tons of problems. So I know a lot of teams working on it, like us including. We'll see how it goes, but I think that's the next big unlock. And for me, again, like there is also another reason is I don't know if you were lucky enough or dumb enough to invest in crypto startups early stages, but if you're lucky and your investment did well on paper, you 5x, 10x, it's really hard to exit. Like there is no token, there is pretty much no secondary market. You're going to deal with GP of SPV, trying to convince him to sell your share of SPV to someone. Pain in the ass. He's not incentivized, like admin work. It's horrible. Like if you try, like good luck. Also, like on the opposite side, if you try to buy, also like pretty bad experience. All platforms charge you like up to 5%. So I think like tokenization of equity or token as equity can solve some of the secondary market problems. But yeah, again, probably not the right choice for most of the startups, but same as like not the right choice to launch a token before PMF for most of the startups. So, yeah.
Okay. So like matching people, that's a real world and an online problem. But then another kind of online problem we need to worry about, and this is a question for Thorsten, is how do you design a product that serves both crypto native users and institutions without building two entirely separate stacks?
Yeah, it's a really good question. I think it's a big problem. I strongly believe, like at the core, you want to build just one thing, right? Like you want to have sort of shared infrastructure that spans both the DGen sort of crypto native use case as well as the institutions. Otherwise, it becomes just too inefficient. But then it's really all about how do you design interfaces on top of that actually appeal to those groups, right? So like look at crypto native. It's a lot more like you want ease of access, you want like full decentralization, self-custody, right? Like you don't want to have to deal with like all the like KYC, compliance, AML stuff, but for institutions, that's what matters, right? And so I think you have to like find that balance of like, okay, how do you sort of design interfaces that then appeal to the products? And I think it ultimately comes down to, how do you really understanding your customers, like what are their needs, like, what do they value, and then sort of building from that. But ultimately keep sort of that infrastructure layer the same, because you do want end users or crypto natives and institutions to actually trade with each other, right? Like you don't want to have a tokenized stock for DGens and a tokenized stock for like the BlackRocks of the world. That just becomes super inefficient.
Okay, so Paula, what's your take on this? Is it front end or is it back end that's the bigger issue with the two stacks?
Yeah. So I agree. It is, and it's front end. It's really kind of that user interface, because at the bottom layer, it is good data, low risk. But how that materializes for crypto native or kind of institutions is a little bit different. A lot of crypto native teams we've seen, they like API first, quicker, and that's kind of their priority. But when it comes to the institutions we work with, they want really strong UI, good auditability, reliable. Well, both sides want reliability, but a different type of auditability and just record keeping. But at the end of the day, it is the same bottom layer, so they should not be treated as different. Just shown differently to them, and we do that.
Cool. Sounds like people just need to trust these interfaces they're using in the stacks. So this is a question for Matt. What are the minimum requirements for trust? Audits, attestations, legal opinions, third-party administrations, insurance, vibes?
That's a really big surface area. So from our end, how we view it is as things are getting more and more tokenized on chain, as more and more types of things are getting tokenized. Like you mentioned, the auditability, the verifiability is very important. So we can do so much of that on chain. We obviously come from the file storage side of things. And this is an area that not a lot of people think of at first. Then it becomes very important, often too late later down the line when they are kind of running into these hurdles. So on our end, like the bare minimum is going to be, okay, you need to make sure that the files that you're referencing or are related to your on-chain assets, you need to make sure they're tamper-proof. You need to make sure that there's basically a chain of custody for how they've been modified. Luckily, blockchains are amazing at the ledger-keeping side of things, but the files themselves also need to be traceable with that. So that's where we focus on our end. That's kind of our bag for the talk here. But the other side of it, too, is it needs to be very easy to like find these audit trails, even if you are keeping track of them properly. So user interfaces, both on the kind of retail side, the institutional side, both of those need to be really on top of their game for surfacing the area or surfacing the data that we are tracking. And then lastly, this data it needs to start thinking about kind of privacy controls as part of it. So on the public side, we're used to Ethereum, Solana, et cetera, all these public chains. And public data is great for a lot of things, but as we move towards more institutional finance, we've mentioned real world assets, equities, things like real estate, right? You're not going to want to put a person's credit check up on a public blockchain. That's you're going to get in trouble for that. So we need to have data rooms that follow these assets, but the data needs to be secured and accessible only by those people that need it. So there's a lot of things to touch on there. That's kind of a high-level overview, but hopefully that answers the question.
It's a lot to cover, and that's just the whole trust and user interface. And one of the questions is, what's it like for people who actually have to use this? What's their experience once they use it? So this is a question for Thorsten. What does a good secondary market liquidity look like for a tokenized asset? And who's responsible for providing that liquidity and that experience of actually using the real-world asset?
Yeah, it's a really good question. So I would maybe start with what does good liquidity actually mean, right? So ultimately, the way I think about it is you want to be able to enter and exit a position, right? And you want it to be at predictable prices, right? You don't want to buy something at 100 and suddenly when you sell it, it's worth nothing, right? And so you want to have that predictability, and then you need market depth, right? You don't want to have 50% price impact if you try to sell a couple of shares. So I think those two ultimately are table stakes, right? And if you look at regular tokens, most of the liquidity is in AMMs, right? You have your bid-ask spreads that determine sort of the price, and as long as there's enough sufficient sort of funds in these pools, right, you can trade against them. I think with tokenized assets, it's a little more tricky because you have sort of an external reference price, right? Like an AMM arriving at a consensus that a share of Coinbase is worth $300 isn't really that valuable, right? If the actual share is trading at 150 or something externally, and so I think we have to find mechanisms that sort of keep those things in check, right? And I think ultimately a lot of that, I think, is on the issuer to sort of set up the guardrails for that, right? So what do redemption mechanisms look like? How can you incentivize market makers to actually arb these NAV deviations, right, and bring it back to the sort of the true price? I think that the really tricky part is it's almost what happens sort of outside of the hours where that's possible, right? I think markets work 24/5 pretty reliably, right? So you keep the market price sort of in peg during 24/5 pretty decently, but over the weekends it becomes tricky, right? Because there's really no way for the market maker to actually go and do those arb trades to bring it back. And so it almost feels like the tokenized assets at that point become almost like prediction markets, right? It's on Saturday, it's a prediction market of what's Monday open going to be like. But yeah, I think ultimately, I think the issue is sort of setting up that infrastructure, incentivizing market makers, and then I think the sort of then it comes down to market makers, liquidity providers, sort of facilitating those trades, right, and having an incentive to do that.
Cool. So incentives are one way to ensure compliance, but there's also regulatory compliance that sometimes gets in the way. Have you ever had the experience where you're trying to trade something and up comes a pop-up, please upload your passport? That's kind of a really rough experience. And with real-world assets, you might run into that. So this is a question to Matt. How do KYC and compliance get implemented without destroying this UX experience? And what's the best pattern that you have seen?
Yeah, it's a really good topic. Like you said, you're trying to trade something and upload the passport comes up. The reality is we live in a world of laws and we don't want to go to jail. So we need to comply with regulations where we are operating. But that being said, that doesn't mean that you need to throw the full force of regulatory compliance at every single one of your users. There's a threshold, right? So if your user is trading $100 of whatever, a lot of times they're going to require a far less regulatory threshold than an institutional trader that's going to come in and want to start slinging around millions of dollars. So there's thresholds that you need to kind of apply to your users based on what they're doing, and just making sure that it's a gradual threshold of onboarding so that you may not need any sort of regulatory compliance when you're coming in and just exploring the application. But when you want to make a first trade, maybe it's a minimal thing there. And then as you progressively move further and further, you may see more and more regulatory compliance checks that are needed. So minimum viable compliance is probably it sounds like a terrible word to use, but coming from like the minimum viable product side of the house in software development, that's kind of how I would look at that. The other side I would consider is focusing like where the compliance checks need to be. So the area that most regulations are kind of hitting on right now is that transition point between fiat and crypto. So you're moving your bank dollars into the crypto ecosystem. That's likely where the compliance checks are going to need to hit the hardest. So I think somebody mentioned Phantom on the last talk, being a Phantom maxi, but a while back I was importing some money into the Solana ecosystem, and it just let me one click do that from my Robinhood account. Robinhood already has my KYC, already has all of that associated with it. It just kind of one click imported, and I'm assuming the KYC was just handled behind the scenes. So there's ways to do this. I don't think every single app needs to be a bank. I think integrations are going to be critical, letting people kind of have, I don't want to say centralized, but you get the point of basically having kind of having these checks and compliances kind of attached to us in a way that's portable between applications, that we don't need to redo it on every application, is going to be important. So, yeah.
Okay, so like compliance is one way that failure gets introduced. So this is a question for Paula. What are some of the other failure modes that we might see in real world assets? You know, collateral, governance, Oracle risk, enforceability, problems redeeming. I mean, we talked about problems just trying to sell stuff. So what are your thoughts on that?
Yeah, so definitely, I mean, all of them are problems for sure. And I think if any of them don't work, the RWA kind of falls apart. We've seen the good examples of when there's no good collateral, what that does to stablecoins. But I think to advance in the RWA space, to be able to do equities and kind of these next layers, we're going to need to work out all the other aspects. So I believe what Thorsten said, so if you can't, redeem the equity, then is that really even an RWA? If you have a token in this company and it describes the equity, but there's no way to redeem it. So I think that's why we've been able to have stable coins. We have very clear on-off ramps that represents the dollar. It works. But yeah, to be able to move forward, we're going to have to work through that, as well as legal enforceability. So if it doesn't legally actually represent the asset, then it's just a token or a database entry. So I think it's really good that kind of the financial and traditional worlds are somewhat converging a little bit with us, if we actually want to be able to have real world assets on chain. So yeah, all of them need to be solved.
Okay, so when we saw that, though, we want some of this magic. Why are we even bringing real-world assets on chain? So this is a question for Katie Wheeler. How do you think about composability with DeFi when assets have real-world constraints? You can't just, let anyone buy anything. There's sometimes restrictions on these.
When I think about DeFi utility, often what I find is traditional assets weren't meant for DeFi. So one example of this is we brought our tokenized equities to Solana recently. Stocks have a lot different characteristics than a meme coin. They pay dividends, they do stock splits, there's a lot of different corporate actions that you have to deal with. And if you're using one of these assets in DeFi and all of a sudden it just, splits in 10, you're going to get liquidated. Like, not a great experience. And so the way that we've solved that is we've basically created all of our assets to be total return trackers. And so when a stock pays a dividend, we auto reinvest the dividend on behalf of users. So you get all of the upside of the asset, but you don't have to deal with fragmenting your liquidity or breaking DeFi. So I think sometimes you just have to be a little creative in the way that you think about real world assets and the kind of infrastructure that crypto rails are already on.
Okay, cool. So it sounds like there's a lot of people that need to coordinate when selling with a DeFi, like you mentioned the dividends and the stock splits. So this is a question for Ev. What's the most important partnership type for scaling real-world assets on Solana? Custodians, brokers, banks, market makers, or fintech distribution?
Yeah, that's a good question. I think there is this famous saying that first-time founders are obsessed with the product, second-time founders are obsessed with distribution. I think 100% true. Like, you can have best product in the world, but if no one is using it, it's pretty pointless. Or you can have mediocre product with great distribution, and we saw a bunch of teams win with this approach. So we think a lot about distribution. The way to get distribution, or 10x, 100x distribution, is through partnership with neobanks, exchanges, TradFi players. We have pretty healthy own user base, 300,000 KYC users, but they are all pretty crypto native. So last year, we signed a partnership with Kraken and immediately unlocked 50x distribution. So now if a project wants to fundraise, we give them on-chain distribution via Legion and then distribution via Kraken. So Kraken users can immediately invest in the projects, which is great. And like, for a founder, this is pretty good offer that I have 2 different distribution channels. We're going to soon announce few more partners. We love Kraken, but we're going to have like few more partners just to cover the whole world. And yeah, I think that becomes like a really compelling offer for startups.
Cool. Yeah, there's a lot of issues going along with real world assets. So let's just take one last opportunity. Let's start with Mike, not Mike. Let's start over at the end, and just give your last Matt. Sorry,
You can call me Mike. It's fine.
Matt, Mike. Okay. Okay, Mark. Let's go ahead and just everyone give their last thoughts about how real world assets and Solana can really benefit each other. We'll start with Matt, and we'll come all the way down and finish up with Paula.
Yeah, I mean, I think the overall theme that we've kind of talked through today is like, while high yield returns and like meme coins are fun, as we kind of get the institutional finance side of things, the laws and regulations are important so we don't all go to jail. So we just need to make sure that we're doing things properly. Obviously get things to market, but we talked about minimal viable compliance, making sure that whatever the laws are at the time that you're launching, hey, let's make sure we hit those as they continue to evolve. We need to continually upgrade what we're doing to make sure we're staying compliant. And then, yeah, I mean, just as we bring more things on chain, KYC, it's important. We need to make sure it's easy for people to get KYC'd, and then just making sure that all of the data that is flying around with these types of operations, making sure that we're handling that in a very secure way so we're not putting people's PII on chain. Yeah.
Yeah, I think like the biggest unlock is new users and liquidity. Like, if you can bring those people on chain and clearly describe the benefits of using RWAs, like what are the perks, and make it easy, abstract all the complexity of blockchain, I think that will be a huge win. Like, we're, I guess, like every year trying to say like we need more like new users, but like the last big thing was meme coins, which brought like tons of new people, but a lot of people left as well. So yeah, I think that's kind of the best perk of RWAs.
Yeah, I think agree with everything that's been said so far. I think one other area is really how can we make it almost like a no-brainer for people to want to use Solana on chain for RWAs. But I think for stocks, for example, today, if you're in the US, it's probably still more efficient to just go to your brokerage and buy it there, right, rather than do it on chain. It's a little bit of a different story if you're outside of the US, right? It gives you sort of access to these markets. But I think there are other categories of RWAs where I think it's much harder to access, right? Like I think you mentioned earlier, like private credit funds, private equity funds, where you can get them through like some banks, but they have like really high minimums. Like redemption is a giant pain, and so I think solving some of those use cases and really bringing those things on chain and sort of like democratizing access to them and bringing in liquidity.
Yeah, when I first started working with the Solana Foundation 2.5 years ago, they were all about PayFi. And so for the first year, we did a lot of integrations with USDY in payments. So you could settle Shopify transactions in USDY. Now Solana is all internet capital markets, which I think was a smart pivot. And so we've been focusing on building these financial applications on Solana. Once a lot of these tokens are live on Solana, they're really just little Lego building blocks, right? So we have 205 assets live on Solana today. We'll scale that to about 1,000 assets by the end of the year. And then once these all exist, you can do all sorts of cool things with like AI. AI, auto rebalance my portfolio every 5 minutes based on XYZ criteria. You can do perps, you can get margin, you can cross collateralize. I think it really creates a lot more utility for the assets. And so with Solana being very scalable, it's very easy to do a lot of these use cases. We first deployed global markets on Ethereum, and the gas subsidies were quite atrocious. And when you're speaking to like neobanks or people who are living in Argentina or Nigeria and they have very small transaction amounts, the gas and the fees just eat away at it, and it doesn't even make sense anymore. So if you can have these things live on Solana, it scales a lot faster, it's a lot more efficient, and you can do a lot more innovative, cool things, especially with AI rolling out.
Cool. And yeah, just to kind of tack on to some of the things already said, I think Solana and kind of these institutions and RWAs coming in, there's a lots of benefit from each side. The institutions can benefit from the speed of blockchain, Web3, and obviously Solana is one of the quickest. And Solana and Web3 can benefit from these institutions coming in, the market caps raising, the liquidity coming in. I mean, maybe not like these weeks, but in general. So it does, pay to invite them in, but to do that, we do need to make sure that we do have the compliance and everything that they do require. Like Matt said, I was trying to remember the name. I was like, Matt. But yeah, like he said, that we do need to make sure that we are compliant because that is requirements that they have. So that's something that we do at Range. We ensure on the Solana flows of our clients that, they're not messing with OFAC sanctions, what's the payment risks, pre-transaction screening, just to make sure that these kind of checks that and balances that normal TradFi is used to, we can bring over here so we can continue to benefit and grow as an industry. So, yeah.
All right. Cool beans. So, ready or not, real world assets are here on Solana. They're getting better every day.
Perfect.